Welcome back to another episode of the Meet Kevin Show. Today, we have the honor of coming to you from inside Peter Schiff's home in Dorado, Puerto Rico. Peter, thank you so much for inviting me into your home.
Oh, Kevin, it's great to finally meet you.
Absolutely.
In person.
Yes, away from the Zoom screen. So, Peter, everybody wants to know your take. You've regularly said, and you've warned about this, that once the inflation genie is out of the bottle, it's not going back in. Where are we now that it seems like inflation has somewhat peaked and at least we're trending down? Even though it may take longer, it seems like we're not going to the 70s again. What say you?
No, I think we're just starting a decade that is actually going to be worse than the 70s from the standpoint of how bad inflation is. And in fact, last year, if you measured prices the way they measured them in the 1970s, the inflation that we experienced in prices in 2022 was actually worse than any year of the 1970s. In fact, it was worse than 1980 or 81. So we're already off to a really bad start. But you have to understand that the inflation of the 1970s, those seeds were planted mainly in the 1960s.
With the price caps?
Not the price caps. That was kind of the first attempt to kind of attack the symptoms of inflation. Because remember, inflation is a very misunderstood word. Like, people think it means rising prices. It doesn't, right? If you get an old dictionary, an old Webster's dictionary, it doesn't even have to be that old, in the 1970s, even 1980s. And you look up the word inflation and it says to expand, expansion of the money supply, expansion of the supply of money and credit. A result of inflation is that prices go up. But the government and certain maybe Keynesian politicians that support government, they wanted to fool the public so that they really wouldn't understand where inflation came from. So they kind of redefined it as rising prices, because the government doesn't raise prices, right? Private businesses raise prices. Like, you look at Elizabeth Warren today when she was questioning Powell. She was, trying to imply that prices were rising because businesses were gouging their customers, right? Inflation is not caused by businesses. It's caused by government. Government expands the money supply. The Federal Reserve does that in response to deficit spending from Congress. And so it's government that is the source of all inflation. But by mislabeling it as rising prices, they can deflect the blame. But getting back to why we had the big increase in prices in the 1970s, in the 1960s, that's when we had the Lyndon Johnson real big increase in government spending, both on welfare and warfare. We had the actual war in Vietnam, right? We also had, the space race. So we're spending a lot of money on NASA, spending a lot more money on Vietnam. Then we get these great society programs and the beginning of Medicare, Medicaid, and all this. And they called it guns and butter at the time, right? We're spending. And then they started running these big deficits. And where'd the money come from to finance these deficits? Federal Reserve printed it. Now, because they printed so much money, back in the 60s, we were on a gold standard. And because they printed so much money, our creditors realized that we couldn't make good on our obligations to pay gold, because all dollars were IOUs for gold. So in 1971, because there was a gold drain, because our creditors were taking their Federal Reserve notes and asking for their gold, the official rate was, $35 got you an ounce of gold. But after a couple of devaluations, Nixon went off the gold standard. And then prices really just spiraled out of control because there was no restraint at all on the printing press through the 70s. So the money they printed in the 60s, they kept printing more in the 70s. And we didn't really step on the brakes until Volcker came around in the early 80s. But it started in the 60s. It showed up in the 70s. Now, the inflation that we experienced in 2021 and then worse in 2022, it really had its roots in the prior decade.
Wow.
It really started in earnest in 2009, following the 2008 financial crisis. That's when the Fed lowered rates to zero and launched quantitative easing for the first time.
Yeah, February of 09, yeah.
Right. And so basically from February of 09 until like March of last year, right? Interest rates were basically at zero. Maybe it spent a year or two where we got up to 0.5%, 1%, 2%, but then quickly came back down. And, the balance sheet went from under $1 trillion to 9 trillion, wherever it went to.
After COVID, yeah, exactly.
Right,
yeah,
and
yeah.
we just flooded the economy with inflation, right? And in fact, the Fed wasn't, the Fed was honest about what it was doing in a way, because all the Fed chairmen said that we didn't have enough inflation, that we were below target, right? That the target was 2% and we were 1.5%. Oh my God, this is terrible. We don't have enough inflation. So it was a specific policy goal of the Fed to create inflation because they said we didn't have enough of it. Now, part of the reason was because they lied about it, because the CPI isn't honest. You generally have to double prices. So if the CPI says 1.5, it's 3.
I see.
But that means what? And it also, if it says 8, it's 16, right? So we've got massive inflation if you honestly measure the effect.
Is that because of the weightings that you were?
I don't even know how they calculate it anymore, but there's all kinds of substitution. The basket doesn't remain the same.
Of course. Yeah.
There is hedonics where they claim that quality is going up.
Right. Like the iPhone now might be $1,000, price went up, but the utility might be 100x.
Yeah, they claim, but I mean, but it's not any real better for the consumer. But there's so many other products where quality just goes down. I think about, air transportation. I mean, you don't have to worry about that anymore. Now you're flying around your private jet. But those of us who are still flying commercial, little people, you have to pay extra. You want a blanket, you want a pillow, you want to check your baggage, right? But they don't put this into the CPI. They just look at the price.
You're looking at ticket fare, but now they're charging you for everything they didn't previously charge.
And of course, you don't have, now you have 2 connections instead of nonstop. There's all kinds of delays. I mean, so the quality has gone down. As somebody who's flown, I can, attest to the fact that the quality is much lower than it was. But, they don't adjust for that.
Now, do you think that is because of COVID and the pilot and plane shortages?
No,
or just an example of CPI?
It's just an example of the CPI not capturing the degradation in quality.
Got it.
I mean, and a lot of companies cut back on, food companies. They'll give you lower quality ingredients in the food, less fresh stuff, more processed, and it goes, now pet food too, they put, crappier ingredients there. So there's all kinds of ways that they reduce the quality instead of increasing the price, or maybe they do a combination of both. But the CPI doesn't get that. I mean, I know I did an exercise back in 2013. You can see the YouTube video up there, and this is in 2013. And I looked at the prices of newspapers and magazines because there's a part of the CPI that says newspapers and magazines.
Subscriptions, yeah.
Right. And according to the CPI, newspaper and magazine prices over the prior 10-year period were up by 30%. So I just said, well, let me check. Not that hard to do. Let me go on the internet, go back to 2003 and look at the New York Times, the Wall Street Journal, Time, Newsweek. I took like maybe 10 to 20 of the most circulated.
Yeah.
And I just looked at the prices that were written on the covers in 2003. And I looked at the prices on the exact same magazines on the covers in 2013. And I compared. And the actual increase was 130%, not 30%. So the question is, where did that other increase go?
Marketing.
It went into the CPI, but it didn't come out, right?
Yeah,
so I don't know the methodology, but I do know that the Boskin Commission back in the, I think, late 80s, they convinced everybody, or the government convinced everybody, that the CPI was overstating inflation. So we needed to fix it so that it got it right. Well, they actually did fix it. The fix is now in, and now it's understating inflation.
I see. Yeah.
But the problem is now inflation is so high that they can't pretend it's under 2%. But the point I was making is the Fed had a policy goal. We want more inflation. Yeah. Well, they delivered. We got more inflation, a lot more inflation.
So they were right.
But we didn't.
Is Peter Schiff saying the Fed was right?
No, we didn't need more inflation. No. We needed it like a hole in the head. I mean, we needed less inflation. But they were hiding behind a rigged CPI to claim that we needed 2%. And, where is this 2%? Powell says that, we need price stability.
Right.
And that's defined as prices going up every year by 2%.
Right.
Now, how is that stable? That sounds like escalating prices.
I suppose the rate of change is stable, but yeah.
But but prices themselves aren't stable.
Right.
Stable prices they're the same.
True.
That's stability, right? But they just concocted the idea that it was 2%. But the whole 2% number came out of New Zealand. That's where it started. But it started as a ceiling. It was not a target. Like, we need 2% inflation. Like, if you only have 1, that's a problem. It was, as long as you were below 2, you didn't have to worry. The minute it got to 2, you had to do something about it.
So it's almost like your cholesterol should be under this level, but if you're below it, you shouldn't be trying to raise it.
Exactly.
Okay.
But they said we needed to target 2%, which I always thought was such a ridiculous, or the amount of hubris that you would have to have as a central banker to think that if inflation is 1.8, you could just dial it up a little bit and hit 2%, like right on the money. Or if it was 2.1, you just dial it right back down. I mean, if your inflation is 1.5, that's close enough to 2. Why would you even, like, it was even worse with the ECB, because the ECB, if you remember these Mario Draghi comments, they said that their goal wasn't 2%. Their goal was to be close to, but below 2%. So they were targeting like 1.99.
Right.
And they were saying, 1 year, I was talking about my podcast, I think it was 2018 or 19, inflation in the Eurozone was like 1.74.
Sure.
Yet they still had interest rates at negative 40 basis points. They were doing QE because they weren't close enough to being just under 2%.
Right.
And they were 25 basis points away. Now they're at 9%.
Yeah.
Now they're so far above.
Right.
But are they panicking? No. I mean, they still got interest rates at 2.5. They're not even shrinking their balance sheet. And, they're 700 basis points above their target. Yet they were freaking out when they were 25 basis points below. But the whole idea that you need inflation is absurd.
What if we had deflation?
Great. I mean, now, you're looking at falling prices, but if you go and look at the CPI in 1900 and look at the CPI in 1800, prices were cut in half over 100 years. So we had falling prices for 100 years.
Through innovation.
Yes, that's what's good. And everything. I mean, look, you got a cell phone here. You remember how much the first cell phone cost?
The first phone I got was like a T-Mobile Razor or something like that.
Well, you're still young. But like I remember, I don't know if you ever saw Wall Street.
Oh, yeah. Okay.
He's got this.
Gordon Gekko, right?
That thing back then in the mid 80s, that was like a $2,000 or $3,000 phone.
Oh my gosh.
You could have I bought my first car in 1980. It was an MGB. I paid $3,700. Wow. So a cell phone was about a car. Right? How many people had them, right?
Wow.
Why does everybody have cell phones now?
Oh, if prices come down.
Yes, that's a good thing. Because they try to tell us that, well, if prices come down, no one's going to buy anything. No, that's how you get more people to buy.
Sure, the standard of living goes up, more people have TVs, more people have cars. Like comparing today to the 50s, the standard of living, would you argue has gone up?
No, I'd argue it's gone down. But the price of TVs have gone down.
That's true, okay.
People have a lot more TVs today. Right. So if you grow up in a house, you got a TV in every room, but your mom's not there because she's working 2 jobs, and you never, because back in the 1950s, if you had a guy went to high school, he could support his wife, 4 kids, buy a car, save for retirement, no credit cards. I mean, people had, I think, a higher quality of life before government got so big. But the free market, the whole time the government has been undermining our standard of living, the free market has been doing what it can to improve it. And so the technology has gotten better. And so, we have more computers, we have more cameras. Of course, they're all made in Japan or China now. We used to make all the cameras ourselves, when we still had an industry before the government destroyed that. But the idea that we need prices to go up is just completely absurd. When prices go down, people's standard of living goes up. Everybody wants to buy more stuff. And the way you buy more stuff is the price of the stuff goes down. Would anybody, like if you said to somebody, what do you want? Do you want food prices to go up or down? Right? Do you want your rent to go up or down?
Sure.
Right? Do you want healthcare to be more expensive or less expensive? Right? Everybody wants prices to go down. Right. And then they'll try to say, well, but if you're a businessman, you want higher prices.
Sure.
No, you don't. You want higher margins.
Right.
You want lower prices and lower costs, because every businessman knows I can sell more if I can lower my price. Every businessman is trying to lower their price so they can have greater volume. So the key for a business is the difference between what it costs me to produce something and what I can sell it for. So businesses weren't hurt by falling prices. Think about all the money that these cell phone companies are making selling cell phones now at lower price points than when they were so expensive. You had to be, Gordon Gekko to afford to buy one.
Right. What would you say to the economic theory that if prices don't go up, then individuals might not be incentivized to ever buy. They would just wait to buy, and that potentially then lowering GDP, and therefore maybe the 2% target encouraging.
No. Well, I mean, if that were true, nobody would own a phone. They'd be waiting for the price to fall indefinitely.
But we have always been above a zero in terms of inflating prices.
Right? No, but I'm talking about prices for phones themselves or computers, right? They go down.
I see. Over time, that your quality.
So there's something called the time value of money.
Sure.
So let's say there's a phone and it costs $1,000. And I know that if I just wait a year, I could buy that same phone used for like $800.
Sure.
Will I wait a year?
Well, maybe not. You might want the utility now.
Yes,
exactly.
Now, if I can't afford the $1,000, I will wait. But if I have the money, I'm not going to wait a whole year to, and obviously that's not the case with food. I mean, if you think the price of food is going to go down, you're not going to starve yourself waiting for a cheaper burger.
Sure.
You're hungry. You're going to buy the food, and what it costs you is what it costs you. But people don't do that. The only people who wait for prices to fall are people who can't afford. Like I remember when I saw in a store, and I remember which was, one of the stores like maybe Circuit City or something. I don't know if they're in business anymore.
Nope.
But I went into the store and I was probably in my 20s and I saw my first high-def television set. And I remember it was like amazing. I was like, this is incredible. It's like looking out the window compared to the stuff I was used to.
Sure.
Now, I really wanted to buy one, but I couldn't afford it. It was like $10,000.
Right.
And that was like back then when $10,000 was a lot of money. Now, of course, I have high-def televisions in pretty much every room. I got one in the bathroom, right? So does everybody else.
And in your pressure chamber.
Yes, I do. You're right. I've got one in my hyperbaric chamber. But why do I have them now? Well,
they're cheap.
Yes. Now, actually, I have more money, so I actually could afford to buy one if it was $10,000, right? But a lot of people who are in their 20s, who are at the same point in life that I was, are buying these televisions that I didn't buy. It wasn't that I didn't want it. I just couldn't afford it. And if I couldn't afford it at $10,000, if it went up to $11,000 or $12,000, it would have been even less affordable.
Right.
So the fact that prices came down, that's what helped me buy.
From 10 to say 9, 8
whatever
wouldn't have made a difference.
As prices come down, more and more people enter the market.
Yeah, of course.
Until you reach a point where they're low enough, for mass distribution.
So you would definitely argue the theory that some inflation is good to be stimulative and to help reward people who take on debt for their businesses and try to advance their businesses sooner. You're super anti that.
That's all BS. And of course, inflation does reward debtors.
Oh, yeah.
But only if the inflation is higher than what was assumed when the loan was originated.
The nominal
because there's going to be you're going to pay a higher rate of interest to borrow money
again
when the lender knows there's inflation because it's going to be built into the yield.
Right.
What benefits the debtor is, let's say you and I enter into a loan. Let's say I loan you $10,000.
Sure.
And we expect 2% inflation.
Right.
And so I charge you 4%. So I can make 2% after inflation. Let's say inflation ends up being 10%. I was wrong. We were both wrong.
Yeah.
Well, I'm screwed and you've got a windfall.
I win.
Because you're not paying me enough interest to offset my loss of purchasing power.
Right.
So inflation can reward the debtor, but it also punishes the lender.
Mm-hmm.
And, the real key to economic growth and rising living standards is productivity. Mm-hmm. You have to have more productivity. Well, where does that come from? It comes from capital investment. Well, where do companies get the money to invest? It comes from savings. It comes from underconsumption. So to have a really strong economy where you have rising living standards, you need to have a lot of savings. Well, you're not going to have a lot of savings if you're punishing the savers with inflation, or artificially low interest rates like we have. I mean, we don't have real economic growth in this country because we punish savers. And so we're dependent on the rest of the world where they do save. Right? That's why we have these huge trade deficits, because we don't have the industrial capacity because we didn't have the savings to do the capital investments to build the stuff ourselves. Now, we happen to issue the world's reserve currency for now. And so the rest of the world is dumb enough to exchange all the stuff they make for the paper we print.
Is your thesis then that at some point in the future, the dollar will no longer be the reserve currency? Or, I mean, historically, every currency to have ever existed has gone to zero, has gone bankrupt and kaput. Do you expect that to happen for the dollar as well?
Yeah, well, there hasn't been a fiat currency in the history of the world that hasn't gone to zero.
Okay.
Now, the fiat currencies that exist today haven't gone to zero yet. Right, but
they're also newer.
Right,
yeah.
But the ones that were around 200 years ago, 300 years ago,
Right.
they're pretty much all gone. But real money is eternal. I mean, gold. I mean, if you find a gold coin that was lost by some Roman centurion who dropped it somewhere, and you find that gold coin, you could buy pretty much what you could buy back then.
Right.
I think a Roman toga was about an ounce of gold, a really nice one.
Wow.
And now you can get a pretty nice suit for an ounce of gold. But if you find some paper money, I don't think they had any back then, but if you find some paper money from some bankrupt nation from a few hundred years ago, it's worth nothing.
Mm-hmm.
I mean, maybe if it's in pristine condition, maybe it's like a collectible or something. But it doesn't have any real.
But your
any real
expectation
value.
is we might go into that sort of direction.
Well, I am sure that far enough into the future, what we currently use as a substitute for money, Federal Reserve notes, will have zero value to anybody. The question is, how long is that process going to take?
Right. 2 years, 10 years, 100 years.
Well, I'm sure they'll have value in 2 years, 10 years, 100 years. Tough to say.
Okay.
But how much value? I mean, if you look at what value the paper currency has today versus 100 years ago,
sure.
It's lost 99% of its value. So something that cost you a penny 100 years ago, you need $1 to buy it. Something that costs you $1, you need $100. That's basically, but in terms of gold or silver, the prices are relatively constant. But what's more, I think, important is not whether the dollar is going to have any value, but how much of its value will it lose and how quickly. And a lot of that is a function of how much longer the dollar will stay as the primary reserve currency. That's a $64 trillion question. I mean,
do you think that aligns with how long the United States might be the largest economy in the world?
Well, I think China's probably, I'm not sure maybe by GDP, we're still bigger.
Right.
Than China. But, on a purchasing power parity basis, probably not. I mean, but yeah, I do think by the end of this decade, China will be a larger economy than the United States in total.
And that aligns with your 10 years.
Yeah, it may well be that before the end of this decade, the dollar is no longer reserve currency. I mean, you can see a lot of nations, including China, Russia, India, even in the Middle East now, moving away from the dollar, trying to reorient their trade in other currencies. And I think what we've done recently with the sanctions on Russia only highlights to the world how important it is to de-dollarize. I mean, they should have done it anyway because it's distorting the whole global economy where everybody is warehousing dollars. And the longer the dollar remains the reserve currency, the bigger our imbalances become. Sure. We have record trade deficits. We have, we are the world's biggest debtor nation. We have huge current account deficits. All of this is being fueled by the dollar's reserve currency status. And so the longer it remains the reserve currency, the bigger our external liabilities become, and the more money the rest of the world's going to lose when we default.
Sure.
Right? Because right now we're all talking about, we can't default on the debt. Right? Well, we can't pay the debt either. That's one thing, right? So we will eventually default. The question is how? We're more likely to default through inflation than legitimately, not paying. Because that is what's going to happen. I mean,
can you describe that? What would that look like? Because we expect, obviously, the debt ceiling to be raised. We can't say it with certainty, but we expect that.
Of course it will be raised.
So what do you mean then?
Yeah. I mean,
how do we default?
But the problem is the debt. The ceiling, in theory, would be part of the solution.
Right.
The problem is they raise the ceiling whenever we get there. So there really isn't a ceiling.
Yeah.
But when they say we have to raise the debt ceiling because we have to pay our bills,
right.
That's not why we want to raise the debt ceiling. If we paid our bills, we wouldn't have any debt. The reason they want to raise the debt ceiling is so we can continue not paying our bills, right? We go into debt instead of paying our bills.
Right.
So if we didn't raise the debt ceiling, we'd be forced to pay our bills. The problem is we can't, right? So that's why we have to go deeper into debt. But just raising the debt ceiling doesn't mean that we're not going to have to deal with these consequences. It just means we can kick the can down the road while the problem gets worse. Because eventually we're going to hit a lending ceiling. And that we can't raise. That's like the lenders are like, no mas. We're not lending you any more money because we're not throwing any more good money after bad because you can't even pay us back.
But what you're saying is people would then stop buying treasury bonds.
Yeah, and in fact, we've admitted it. I mean, you listen to the senators and the congressmen today talking to Powell. If we don't raise the debt ceiling, we're going to default. Right now, What are we telling our creditors? We're telling our creditors we'll only repay or only pay you back if we can find some other sucker to lend us the money.
Sure.
But the minute we can't borrow money from somebody else, we're not going to pay you. So that's an admission that it's a giant Ponzi scheme, right? The U.S. has no ability to pay its debts. All it can do is find new lenders to lend it the money to pay off the old lenders. But now how are they going to repay the new lenders? Well, they got to find another group of suckers who will lend the money, knowing that the only way they're going to get it back is if there's an even another greater fools willing to lend. So this is, it can't go on. Ponzi schemes are illegal because they don't work. Because the government runs it doesn't mean it's going to work.
Is it possible our economy grows such that the debt that we have outstanding today is nominal relative to economic productivity?
No, that's not possible because the debt is growing much faster than GDP. The only way they're going to reduce the debt is through massive inflation. So we owe 30 trillion. Or almost 32 trillion. Let's say, and by the end of the decade, we'll owe more than 50 trillion.
Okay.
Well, I mean, if we had hyperinflation, and a cup of coffee was $1 trillion, well, the debt's no big deal. It's like 50 cups of coffee and we're good. Right?
Yeah.
So obviously, if we don't have hyperinflation, but even if, let's say, prices go up 10 times, let's say the government creates enough inflation that the dollar loses 90% of its value between now and the end of the decade. And so everything costs 10 times. You think inflation is bad now, everything is 10 times as expensive. Well, now that $50 trillion debt is like $5 trillion in real terms. So that's how they get out of debt. If you look at, what we mentioned earlier, inflation benefits debtors and punishes creditors. Who is the biggest debtor in the world?
What, the United States government?
Yes. And that's why the United States government is creating all this inflation. But it doesn't want to accept responsibility for the inflation because obviously the voters don't like it. So they try to point fingers at Putin or somebody else. But the government benefits from inflation by wiping out its debt. But also, the government benefits from inflation in that politicians get to bribe the voters with government programs.
Like stimulus.
Yes, without asking the same voters to pick up the tab. Right? See, when they raise taxes, people don't like that. I mean, they like it if you raise taxes on the rich. And the rich is defined as anybody who has more money than you. Right? So as long as they raise money on people that are richer than you, you're fine. But nobody wants their own taxes raised. But everybody wants a check from the government in some form. Well, how does the government pull off that sleight of hand? How do they give the public something without taking something away? Because the government doesn't have any money. It only has what it takes in taxes and then redistributes. So what they do is they run deficits. They just hand out a bunch of money and they don't ask anybody to pay taxes. Where do they get the money? The Fed creates it. So it's inflation. Inflation is a tax. So instead of sending your money to the government, you send your purchasing power. The government takes your purchasing power because they don't need to take your money. They have a printing press. So they just print money and they give it to somebody. And now that person goes and buys some stuff, but he didn't earn the money. So he didn't produce anything. He just has money. And now he spends it. And now prices go up. And now you pay higher prices instead of higher taxes. I mean, that's why during COVID, it was so bad. Think about how stupid this was. And I pointed it out on my podcast in real time. In early 2000, the U.S. government said, nobody go to work. Everybody stay home. Right? Don't go to work. Stay at home. But we don't want you to stop spending. Keep on spending money. Oh, you don't have a paycheck anymore? We'll send you some unemployment benefits.
Right.
In
$600 a week.
we're going to give you double or triple what you used to earn.
Yeah.
So we told people not to produce, but to buy more. Buy what? They weren't making anything. So that was an inflationary time bomb because we were expanding the money supply to buy prices, but we were contracting the supply of goods to buy. So we had more money and fewer goods, and prices go through the roof. What should have happened? If the government really wanted us to stay home, they should have said, nobody buy anything. Just stay home and stop spending because they're not working. But that would have meant a deeper recession. So they wanted everybody to keep on spending. It shows you how little understanding they have. And even the Federal Reserve, Powell went to Congress and said, you guys need to spend more money. Don't worry, I'll print it. We need more stimulus, and I got you covered.
Yeah.
So he was encouraging the government to create more inflation. The worst possible combination of monetary and fiscal policy, and we've barely begun to suffer the consequences of that.
I want to hear about this, but why? Are you suggesting the reason potentially we don't use the expansion of the money supply in the definition of inflation today, or in the measures of inflation today, is because that would be too obvious then? That the government
who expands the money supply?
Yeah, it's only the government and the Fed.
Right. Greedy businesses can't expand the money supply. Putin can't expand our money supply. Yeah. Right. So they want to define it as prices. But of course, when you attack prices, you're never going to get rid of inflation. That's why wage and price controls that we had in the 70s, they didn't work.
Wow. Yep.
Because it's like, if you have a fever, if you break the thermometer, that's not going to bring it down, right? You got to get to the cause, not, how you measure the symptoms. So the way we have to fight inflation is by shrinking the money supply, but we really have to cut spending.
Yeah.
When
austerity,
Powell,
like EU. Yeah.
When Powell is raising interest rates, I think that's going to fight inflation. It's not. Because first of all, interest rates are a cost. And just like labor or raw materials, so everybody is dealing with higher interest rates, and that's all passed into
prices,
consumer prices. What higher interest rates have to do in order to bring down inflation is to discourage spending and encourage savings. Wow. So if consumers spend less, then there's less demand. And if they save more, there's more supply, because now there's more money to loan out for capital investment. But that's not what's happening. Interest rates have increased, but they're still below the rate of inflation. We still have negative real interest rates. So we're still incentivizing consumer debt. And in fact, if you look at the consumer, credit card debt is at a record high, savings rates at a record low. Has anybody altered their consumption and savings behavior based on the increase in interest rates? No. No. In fact, to the extent that people can't afford to buy something because the price went up, they don't cut back so much. They just borrow the money and buy it anyway. They keep on paying the higher prices. And government is continuing to run these deficits. We're not going to bring down inflation until we bring down the deficits. We have to reduce government spending. Consumption has to go down. All government spending is consumption. So we're running what the Keynesians would call an expansionary fiscal policy right now. We're running huge deficits. That is inflationary, even by the Keynesian, definition. So even if you're saying we have the Fed that is trying to fight inflation, you have the government that is lighting more fires. So, the Fed is not making any progress. So nor are they going to make progress just by raising rates at the rate they're doing it.
So at the same time as the Fed is raising rates, the federal government is also handing out essentially stimulus checks to chip companies and manufacturers to produce factories out here, battery manufacturers. We're almost in a stimulus war between Europe, China, and the United States for batteries and EV. Would you say then that's stimulative while the Fed is essentially
Well, it's not stimulative in the sense that it helps. But it stimulates inflation if you want to look at what it stimulates. Yeah. But also, a lot of these politicians claim that, the inflation isn't Biden's fault or the government's fault because they have inflation in Europe. So you're going to blame the inflation in the Eurozone on Biden? No, I blame it on the European politicians who made the same mistakes. Right. And more so, the European Central Bank. We have inflation all over the world because all these central banks made the same mistake. They all created a bunch of inflation. They all had 0% interest rates or negative interest rates. They were all doing quantitative easing. It's not an accident that now they're experiencing the consequences. The only thing that kind of makes it difficult is that there was a big lag. I mean,
right. Why was that lag so large? It took until COVID for us to see that.
Until after COVID.
Right. Yeah. Well,
but I don't even think we're seeing all the inflation that we created in COVID. I think we're finally catching up to the stuff from 2009, 2010.
Oh, wow.
I think there's a lot of inflation in the pipeline.
Wow.
And we're just at the cusp of it.
That's why you think it's actually going to be worse today than the 70s, because what you're saying is the inflation we're seeing today is from 2009.
Yeah.
That the COVID inflation hasn't even hit yet.
And we can't do anything about it. Because if you look at what it took, so inflation was, when Volcker came in, 1980, 81-ish, he came in, inflation was 11, 12%, 10, 11, up there, right? And so interest rates went up. Short-term rates went up above 20%. Yeah. And inflation didn't even get back down to 2% for the first time until 1986. That was 6 years later. And the Fed's funds rate in 1986 hit a high of 16%. 6 years later, you're still at 16% just to get inflation to 2%. Mm-hmm. And you know how many years it took to get another year where inflation was 2% or lower?
20 total?
12.
12, okay.
Right. So Powell thinks he's going to get inflation back to 2% and keep it there. He doesn't have a prayer of doing it. If it took 20% interest rates to do it back then, we have worse inflation now, but we have so much more debt. What would the interest rate be on the national debt? Even at 10%, we have a $35 or $32 trillion national debt. If we had to pay 10% on that, that's $3 trillion a year. Yeah. That's more than national defense, Social Security, and Medicare probably combined. I don't know. I mean, or close. I mean, it would be like 2/3 of the government's tax revenue. Yeah. Even when they refinance the whole thing at 5%, you know, we're going to be spending in a couple of years. It's going to be $2 trillion a year in interest, maybe half the tax revenue.
And we're already at a $1 trillion deficit.
We're not quite at $1 trillion yet. By the end of this year, early next year, it'll be $1 trillion a year just in interest on the national debt. That means over 10 years, that's $10 trillion in interest payments. But of course, it will be more than that because rates are going to keep going up and the debt keeps going up. So it compounds.
So what do you say to people who say that one of the reasons you had more inflation in the 70s and you ended up getting a Paul Volcker was because of unanchored inflation expectations, whereas today they're relatively anchored?
Yeah, well, I mean, I think that's a bunch of BS when, you know, and Powell said that again today, that he thinks that inflation is a function of expectations. Like, you know, if people expect inflation, then that's why there is inflation. But that's part of the government's efforts to blame other people for inflation. We don't have inflation because people expect it. People expect inflation because we have it, right? So they got the cart before the horse.
Interesting.
And it's not that my beliefs about inflation is what creates it. They as well, if you think there's going to be rising prices, you're going to demand higher wages. And, you know, but this is all a bunch of BS, you know. But yes, of course, if you have inflation long enough, people will anticipate that it will continue, and they will try to deal with it as best they can. But that is not what's creating it. And it's possible that if people anticipate inflation, but you pursue the correct policies, they'll end up being wrong. There won't be the inflation that they anticipate. And in fact, I think Americans, by and large, are wrong today. There's going to be far more inflation than just about anybody anticipates.
Wow.
I mean, think about the huge inflation that we had. I mean, it measured by CPI last year, 8-9%. How many people anticipated that?
Yeah.
No, it wasn't, you know, people thought, everybody thought that inflation would be low. And people still expect it to be low. I mean, if you look at what they expect, not 2%, but maybe 3%.
Sure.
But they're completely wrong.
So it's 5 years out, the University of Michigan says 4.2% for inflation. Sorry, that might be 1 year out. 1 year out, 4.2%, let's say, and 5 years out, 2.4. What say you to that? Completely off?
Well, I don't even know like how they ask the question. I mean, I've never been questioned, but I mean, a lot of Americans can't even do basic math. I mean, you ever see some of these videos? I mean, the Americans have been so dumbed down on just about any subject. How are you going to ask her like, oh, what's the inflation rate going to be in 4 years? Like, how the hell does anybody know? So, I mean, do they give them like a multiple choice? I mean, I don't even know like how they they do conduct the polls.
Yeah.
I've never received a phone call from somebody from the government asking me what I thought the inflation rate was going to be, 3 or 4 years from now. I mean, so the whole thing is ridiculous to even put any stock into what a bunch of idiots think inflation is going to be, right? I mean, they don't know. I mean, they may be closer than a central banker.
Yeah.
They actually may be more accurate than the people on the FOMC.
Wow.
But they don't know. They're just guessing. How does anybody know what it's going to be?
Now, what would you say, though, to this great moderation that we've had over the last 40 years of, yes, expanding the debt, so expanding the money supply, but also inflation falling from the Paul Volcker era down to really right before COVID?
Well, again, part of that is due to the changes we made to the CPI so that we're not being honest. So inflation has been higher.
So we've been misled, in other words.
We've misled.
Okay.
But I think you have other factors that have come. Like one of them in the U.S. was women entering the labor force. I think that was a big thing because prior to the 1970s, married women, by and large, did not work.
Sure.
I mean, maybe if their husband got laid off, they might get a job just to pick up the slack till he got another job. But, I mean, women didn't work. But as a result of the inflation of the 70s and the reduction in the real income of the men, the women came to the rescue. The women went to work. And so we got the benefit of all that extra labor. We didn't have it before, right?
Increase productivity.
So yes, now we have more people working and producing. And so instead of the husband having to support the wife, they supported each other. And so you had another worker. So that was part of it. Now, of course, we can't do that anymore because they're both working. And now that some of them they're working 2 or 3 jobs apiece. They're kind of maxed out. I mean, I suppose the kids can start dropping out of school and they could pitch in.
Oh,
but they got these child labor laws.
Yeah, it's hard.
But so the other thing I think was the growth of China. I think China really saved us because you had all these people that could do all the work for us at a lower cost.
Deflationary.
And so we were able to outsource a lot of our production, and that kept the lid on prices because all this stuff was coming in from China at prices that we could never produce it ourselves. I mean, obviously, if all the money we printed had to stay in America and we can only buy what we made, I mean, prices would have just gone through the roof. But we were able to send the money to China, and they sent us their stuff. Now, what did China do with the money? They bought treasuries. They bought stocks. They bought real estate. So what happened during the 90s and the 2000s, 2010s is a lot of that inflation ended up in financial assets. That's why stock prices went up so much. That's why real estate prices, that's why bond prices, right? So inflation was showing up in those financial assets because that's how the money was making its way through the economy.
I see.
But where we are now, we're at the early stages of the money flowing out of financial assets into consumer goods. And because that's ultimately where it all goes. Because nobody buys stocks because they want stocks. I mean, there's probably some geeks out there that just love stocks, right?
Sure,
They're just trading for the thrill of it, But most people want to buy stocks because they want to sell the stock and buy something with the money that they earn.
And appreciate
Or guys like me, I buy stocks for the dividends.
Right.
I want to earn dividends and I want to spend the dividends on things.
Whatever you want.
Right. But no one just wants the stock just to brag about owning it or admire the certificate, assuming they actually know what really has the certificate. So ultimately, everybody's goal is to move the money out of the stock market into the real economy and buy cars, take vacations, buy a house, travel, go out to dinner, buy clothes. That's what everybody wants, right? So as all the people start to turn their financial assets into consumption, prices for financial assets are going down because people have to sell. And now the price of everything else is going up because people are starting to spend. So we're just early in that cycle.
Yikes. Now, what's your take on potentially deglobalization also then increasing those prices? Or do you think the world will more re-globalize? That is, maybe move from China to...
No, you're right. I mean, I think we've reached the end of that trade with China where China's like, screw this.
Yeah. Sure.
We want our stuff. We're going to keep the stuff that we make. You keep the money you print, we'll keep all this stuff. And so we're not going to be able to import deflation from China. We're going to be importing our inflation back, right? Because all that money comes back. Because you know what the Chinese are going to do? They're going to take their money and buy our used stuff, right? Not buy our used cars or whatever. So a lot of prices are going to be bid up when they don't want our stocks anymore. They don't want our bonds anymore. They want actual stuff. So we have this big day of reckoning coming with inflation and a dollar devaluation. I mean, there's just no way around it.
What's that going to look like?
Going to look pretty bad, right? Because prices are just going to go way up, and
prices of goods and then assets down.
Yeah, no, asset prices might actually go up in nominal terms, but they'll go down in real terms, right? Compared to
so you expect hyperinflation.
Well, that'd be the worst case scenario. I hope we avoid that. But even if it's not hyperinflation, Weimar Republic style or Zimbabwe style, something like that, we can still have, an Argentina type situation. We can
Turkey, 60%.
We can have something. Now, it doesn't mean that Weimar Republic is impossible, of course, because Germany was very wealthy. I mean, and look what happened, right? I mean, so it's possible that we could end up in a worst case scenario. But to avoid the worst case scenario, it's we're going to have to bite the bullet at some point. Otherwise, that's what's going to happen.
And what time frame do you see that in?
I think once the inflation really kicks in, it'll be quick. The dollar will start spiraling down and prices will go up. And the real problem is going to be the politics of it all, the civil unrest that may ensue, and other really misguided policies. We may go back to wage and price controls again, import restrictions, exchange rate restrictions.
That just makes it worse.
Yeah, of course, because it will create shortages,
right? And
then black markets, underground economy, a lot of crime, violence. I mean, it's not going to be pretty. That's
and you think that could be with as soon as potentially the next few years when the real inflation comes through?
Yeah, I mean, it could happen any time. I mean, then again, we could kick the can down the road for another 5 years. I don't know.
So we could still go to the moon for another 5 years.
Oh, prices? Yeah. I doubt, if you look at the charts, I doubt that we're going to, see another huge run, in a lot of these tech names and things like that. I mean, I wouldn't be surprised if the Dow made a new high. I mean, that can happen because you have some legitimate companies that are in those 30 Dow stocks.
Yeah, like AMC.
Yeah, well, AMC, they would have been too bad they kicked out ExxonMobil, They replaced it with Salesforce.
Yeah.
But yeah, I don't think you're going to see, the FANGs or the even lower quality names. I don't think I think the highs are in for those stocks.
Wow.
Even nominally, I would be surprised if they made new highs. But if they do, it's only with massive inflation, and in which case they made a new high, but you're better off with owning almost anything else.
Oh my gosh, anything other than stocks, essentially.
Those stocks. Well, you can own the right stocks. Yeah. But just the stuff in your kitchen can outperform those stocks, right?
What's prevented you from launching your own ETF like a Kathy would, but maybe more dividend focused?
Well, I have my own mutual funds. I've already done that. I have a whole family of funds. In fact,
and that's Euro-Pacific?
Euro-Pacific funds. Okay. And finally, after several years of lagging the competition, I'm now at the top of the heap. My dividend payer fund was number one last year. Wow. According to Lipper, Morningstar, U.S. News and World. We've got a couple of awards for the fund. In fact,
congrats.
In international value, there's like 350 funds in the category. I only have 2 funds in the category, and my funds are ranked 1 and 3 over the last 1 year, 3 years, and 5 years.
Congrats.
So, and that's a value strategy. Good stock picking, good sector selection. Now, the absolute returns are not great in dollars because we've had a very strong dollar. So the returns are only good relative to my peers. And that's, of course, the benchmark, right? How I've done. But I think the returns over the next 5 years are going to be much better, not only in relative terms, but in absolute terms, because I expect the dollar to be very weak over the next 5 years. Now, I expected it to be weak over the past 5 years, so I got that wrong, right? I expected my funds to deliver better returns for my American investors.
Sure. Yeah.
But I think we're going to make up for that because I think the next 5 years will give us enough extra return to make up for the first 5. Because I think now the dollar's demise is going to be bigger. It's a bigger bubble. More air is going to come out. So I think we're going to get paid the payday for being patient is going to be bigger because we had to wait longer to receive it.
Now, if we have more inflation, wouldn't that lead treasury yields then to increase and potentially demand for those treasuries to increase, leading the dollar to rise, at least in the short term?
Well, that's already happened, right? Yields have picked up and the dollar's gone up.
Right.
But that's only because the markets still believe the Fed is going to succeed in reducing inflation over the long run. Right?
It'll take a failure, in other words. I see.
The markets have to lose confidence in the Fed. For some reason, they still do. If you look at a 30-year treasury,
right,
the yield is less than 4%. Sure. In fact, the yield on a 10-year treasury is higher than the yield on a 30-year treasury. Yeah. The yield on a 5-year treasury is higher than on a 10-year. The yield on a 2-year is higher than a 5-year. Everybody expects the Fed to succeed.
Yeah.
They're not going to succeed. They're going to fail.
So you think the bond market is wrong?
Completely wrong, right. And part of the reason they're wrong is it's so distorted by the central banks. But at some point, the bond vigilantes are going to wake up and realize that the central banks have put themselves in a box and there's no escape. And that inflation is not going away. It's here to stay. And even though they're raising interest rates, the rate that you're getting is still going to be negative in terms of inflation. I don't believe the central banks are able to offer an interest rate that is above the inflation rate.
Wow.
And so as long as bonds are yielding negative, why would anybody want one? You can't win in a bond. You could make money in stocks when interest rates are negative. I mean, you could have a lot of growth, the stock price will go up. But if inflation is 8% and you've got a bond with a 5% coupon, you can't make money. You're guaranteed to lose unless the inflation rate comes way down.
Right.
But it's not going to happen.
So now, do you think it's possible, if they've rigged the inflation data for, let's say, the past decade, that they could adjust the inflation data down going forward?
They probably will. But, you can't fool everybody. It's like, some of the ways that companies avoid raising prices is they just, lower
inflation.
So, eventually you buy a box of cereal and there's just like one flake in there. I mean, you can't, I remember when I used to buy cereal when I was a kid, right, into box, it was filled up to the top, right? And I know that because when I used to go to the supermarket with my mom, we would pick the cereal based on the toy inside. And so as soon as I got home, I would have my mother open up the box and pour out the cereal so I could get the toy. And that cereal was all the way to the top of the box. Now you buy a box of cereal and it doesn't even start until 2/3 down. Like 2/3 of the box is actually empty.
Sure.
By the time you get to the little bit of cereal that's in that box. So, there's only so much they could do. And then they're reluctant to shrink the size of it because, then you'll see. So they just give you less in the same box. But at some point you reach, you can't shrink it anymore. They keep taking sheets out of a roll of toilet paper.
Yeah.
At some point they can't make them that small and they have to just, start raising prices. But it's still the same to the consumer because I just have to go and buy more rolls. Doesn't matter if they just, make the rolls smaller and I pay less per roll. I have to go every time I go to the supermarket, you got to buy, a 12-pack, to get enough toilet paper to last you through the week, especially, if you got women in the house, they run through that toilet paper.
What about Cathie Wood and her idea that inflation today is actually lower than what's being reported?
Yeah, the opposite of what's actually true. That's how delusional Cathie Wood is. Yeah, look, she's just saying that because she's trying to talk her own book. And, you can make the same accusation, of me, right? Hey, Peter's just bearish because he's, long gold stocks or he's short the dollar, So yes, I recognize that you could say that, but in this, I think I'm right. Of course, obviously, maybe she thinks she's right too. But
why do you think she's wrong?
Well, she's pretty much been wrong about everything. But what she's talking about, right, higher productivity, and I don't dispute the fact that in certain areas, productivity is going up.
AI.
Yeah, and now it remains to be seen, right, what that AI is going to ultimately do for productivity. It has the potential to make people a lot more productive because I can start a business and instead of hiring a bunch of people, I can just have a computer program do it for me. And I don't have to use those labor resources. They're freed up to do something else. And, to the extent that I can run a business on a lower budget, well, then I can charge lower prices for whatever my goods or services are, because I don't have to pay all these workers. And so it's very possible that productivity goes up, which is good. We want productivity to go up. And under the normal course, that would mean lower prices. But if we print enough money, that we will lose that benefit. Prices may remain the same, or they may go up a little bit. So we still have inflation. Even if the free market is increasing productivity, the government could be undermining the benefits of that by creating inflation. So
thanks to running a deficit, because by default, you're suggesting we're running a deficit, which is inflationary. And so even if we get innovation, we're still fighting this inflation.
Plus, what's probably going to happen in the world that we live in today versus the free market world that we should be living in is a lot of the workers that end up losing their jobs to AI will just go on some government welfare program. So it's not like they're going to go do something else.
UBI.
Yeah, they're just going to get money from the government. So it's like that's going to offset the benefit.
That's interesting. So that's potentially arguing that even if we get more productivity, we might just take one person completely out of the workforce and then reset that productivity back to right where it was. Essentially.
Well, if the government simply pays the person, so if let's say somebody was employed making $50,000 a year, and then I lay that guy off, I don't need him anymore. A computer can do his job for me, so I don't have to expense that $50,000. Right. And now I fire that guy. If that guy goes and gets another job, it's a win, right? Because now he's doing something else. So now we have the benefit of whatever else he's doing, plus what I'm doing with the computer. But if instead he goes to the government just gives him $50,000 a year and some kind of welfare, and he doesn't work, then society hasn't benefited at all from. There's no extra productivity. The guy's just getting money from the government, and so whatever benefits are being stolen by the government. So we'll see how this is going to happen. I mean, obviously, some of the first people to lose their jobs from a lot of this are going to be the unskilled, like the minimum wage type workers who are being automated out of existence by the minimum wage and other payroll taxes. And a lot of these guys obviously are just showing up on the welfare rolls. I mean, look at the labor force participation rate. I mean, why is it so low? Where are all those people? How are these people surviving?
Could it have been retirements because of COVID?
Well, some people, but a lot of it are just young people that never even enter the workforce. But I think a lot of people are actually coming out of retirement somehow because they can't even afford to stay retired.
Because of the inflation.
They're taking these odd jobs and things like that. But I think a lot more people over the course of this decade who are now retired are going to go back to work.
What's your take on housing then? Housing is obviously a real asset, potentially an inflationary hedge. However, with rates going from 2.7% to now 6.7, maybe in some cases 7%. It seems like there could be an impetus of housing crash, much like you potentially, I believe you predicted in 2005 or 2006. You mentioned you saw the top of the housing market at the end of 2005 and that there would be some form of housing crash. How does that relate to what you're seeing today?
Well, I started warning about the housing bubble when the Fed began inflating it in 2002.
And wow.
I just didn't know when it would reach its peak. But by 2005, 2006, it was pretty clear that we had peaked, and I was, warning about it. And that's when I helped get the hedge fund to short subprime and do all that stuff. And that was in 2006, and that was, pretty much just before it all imploded in 2007.
Right.
But I had been warning about it, and writing about it extensively online in 2003, 2004, 2005. So this thing didn't come out of left field. And I explained exactly why we had a bubble. I talked about how the Federal Reserve, how Fannie Mae and Freddie Mac and the banks, the appraisal industry, and I explained how all of it was happening and how it was distorting the economy and the financial crisis that was going to result when the whole thing burst. So, people have said if they listen to some of my talks, you would think that I came back from the future, and in a time machine gave these talks. But it's basic economics. It's just that so many people don't understand it.
Sure.
They think that I'm some kind of prophet because I can see what should have been obvious to everyone else.
And the schools aren't teaching that.
Yeah, it wasn't that I was so smart. It was that everybody else was so dumb, and so I was the tallest, short person, little person in the room. Don't want to be politically incorrect, but
so how does that compare to today?
Well, look, it is a different situation today.
So this time is different.
We don't have the same type of subprime market that we had back then.
Right.
We don't have as many teaser rates and adjustable rate mortgages now as we had back then, but it's still a big bubble, right? Real estate is still priced really for 3% mortgages, 3.5% mortgages, and we're at 7% and going higher.
Going higher. Where's the terminal for both Fed and what would you guess 2 years from now?
I don't know. It's going to go higher.
Just up.
I don't know. I don't know. I just think it's, in the 1980s, mortgage rates were 14, 15%. They could get up there again.
You could reasonably foresee 14% mortgages.
Sure, it could happen. Now the Fed might cry uncle before then, but we'll see. But mortgage rates are double what they were, right?
Yeah.
At the lows.
Oh yeah.
And so homes for most people are completely unaffordable unless the price comes down.
Right.
And so that's the only thing that can give is the price. So the price will eventually come down for houses. And then that sets off a whole other bunch of problems when people have negative equity.
Right.
And, do they make their mortgage payments? So you get the defaults. One thing that might keep people in their homes today longer than in 2008 is people had a decade to refinance their mortgages at 3.5%. And so even if your house loses value, there's still an incentive to stay there because your mortgage could be lower than what you could rent, right? What you can get a rental for. And even if you sell your home, you can't buy another one because you can't get that cheap money anymore.
Right.
So people do have an incentive to stay in a home, even if it's worth less than they paid, because the mortgage is worth way more.
Right.
That's most homeowners' most valuable asset right now. It's the mortgage. They've borrowed all this money for 30 years and they've got a really low rate. Right. Inflation is going to average, let's say 7 or 8% or more, 10% for the next 30 years. Wow. And you've got a 3.5% mortgage. That's huge. That's worth, the bank should pay you lots of money to give up, to walk away, to pay the mortgage off, sell your house and pay. So that's going to keep more people in their homes. You didn't have that situation back then. Yeah. But the problem for homeowners though is the maintenance costs are going to go up, the insurance costs. And so my home in Connecticut, the property insurance doubled.
Wow.
Because they said, well, it costs twice as much your house isn't worth more, but if it burns down, it's twice as expensive to rebuild it. The materials, the labor, right? So those costs, property taxes going up because all these governments that have a lot of debt, now the interest rates are going up. Where are they going to get the money? They got to raise taxes. So homeowners are going to be under a lot of pressure, even if their mortgage is fixed. A lot of their other expenses are not. But real estate prices are going to come down. In real terms, they're going to come way down. Nominal terms, it all depends on how much more inflation is unleashed, how quickly the Fed folds and pivots. And
you think they'll fold?
They will. They will eventually because they've done it every time in the past. Mm-hmm. The last time was COVID, right? They were trying to normalize interest rates before COVID. And remember when they initially cut interest rates the first time in like 2020, whenever it was, or 2020, or no, it was 2018. They started cutting rates. They had to abort it the minute the market started to fall apart. They stopped. They said, oh, it's a mid-course correction. And of course it ended up being, they went to zero. It wasn't a correction. There was the beginning of going back to zero.
Sure.
So they will reach that point again, but there just has to be more pain before they do that.
Wouldn't that, though, if the Fed does that and rates came down, wouldn't that potentially signal an opportunity for, all right, back to borrowing, stocks back up?
Well, the reason I don't think it's going to be like the third time's the charm for the Fed. I mean, they got away with it in 2008. Mm-hmm. They got away with it in 2020. I don't think they're going to get away with it again because during the 2009 time period, 2010, 2011, and even as late as 2020, the official CPI numbers were still sub 2%. Mm. So they had that cover. Like, okay, we can do this because we have low inflation.
Right.
But if the wheels fall off the bus again, we have a blow up in the financial sector, or whether it's a bank failure or something's going on with the money markets or hedge fund or something cracks somewhere because there's all this debt out there, right? And it's unserviceable, let alone unpayable. So something's going to break. Something's going to implode the longer the Fed keeps rates where they are. And of course, as they keep ratcheting it up, it just puts more pressure. So, but when something happens, some crisis happens,
something
and
breaks.
now the Fed does what it's done in the past. Right? Oh, we're going to slash interest rates. We're going to launch QE. If they do that, let's say inflation is 6%. It's triple their 2% target. How can they justify their response?
Mm-hmm.
And if inflation is 6% and they pursue inflation as a solution to this financial problem, and now it goes to 15%, right? Does the bond market really rally in that circumstance? Because the bond market has rallied every time the Fed has launched QE,
right,
because traders anticipate the Fed buying bonds. And so they want to own those bonds and sell them to the Fed. But if they realize that inflation is running out of control, bonds are just IOU dollars. And if the dollar is going to lose a lot of value, why would you want to buy a promise to be paid dollars in the future when they're going to be worth so much less in the future than they are right now? So that's going to be the real breaking point, where the Fed goes back to QE, and instead of going up, bond prices go down.
Because the trust has been lost in the
and they no longer believe that inflation is contained.
Wow.
And also, the dollar goes down. See, right now, the Fed raises rates, the dollar goes up, bonds go up. What's ultimately going to happen is the Fed's going to raise rates, and the dollar and the bonds are going to go down.
Wow.
Because people are going to realize that they're raising rates, but it doesn't matter. They're still behind the inflation curve. And it doesn't matter if nominal rates go up. What matters is real rates. And if inflation is accelerating faster than the rate hikes, the Fed is falling further behind the curve. So at some point, they're going to wake up, and then gold will respond. I mean, right now, what happens with gold? Whenever there's more inflation than the markets expect, gold goes down. Right? Oh, inflation is hotter, and gold was down $30 the other day. There's inflation news. Why is higher inflation bad for gold? Gold's an inflation hedge. It should be good for gold. It's only bad for gold because the markets think the Fed will be motivated to fight harder. Oh, inflation is higher than the Fed thought. Well, they're just going to have to raise rates higher and leave them there even longer to bring it back down. And so that pushes gold down. What investors eventually have to come to terms with is higher inflation doesn't mean the Fed has to fight harder to win. It just means the Fed is losing. It is losing the war against inflation. And higher inflation is evidence of that. And you need to buy gold on higher inflation. So eventually that's what's going to happen. When we have higher inflation, when we have more stimulus, we have more QE, it's going to be gold up, the dollar down, bonds down, and stocks, it'll be mixed depending on the stock.
Based on the earnings or whatever.
Yeah, I mean, some companies, but initially, a lot of things can implode. I mean, to me, the markets, really look like 2001 around then. I mean,
So your favorite stocks then, if we're in 01, would be all tech today.
No, yes. Well, those are the ones that are going to go down the most. Remember, the NASDAQ dropped about 80%. And a lot of stocks dropped 100%. And the NASDAQ would have gone down more than 80%. In fact, I think it would have gone down 90%. In fact, back in 2000, when the bubble was near its peak, the NASDAQ was now 5,000. I was predicting a 90% decline in the NASDAQ. And the only reason it was only 80 was because the Fed cut rates to 1%. I didn't see that happening.
Darn, Peter, you were off.
But by 2002, I said, okay, we're not going down 90%. I could see the writing. I could read the writing on the wall with 1% interest rates. And so I knew that, the market had bottomed, but I still didn't buy tech stocks. I was just buying, value stocks and foreign stocks. Now I should have, loaded up, should have just bought a bunch of Amazon back then. Or, that one survived. Amazon,
Apple,
eBay. Apple was a great buy back then.
Yeah, sure.
Because Apple was the stock that didn't even participate in the bubble. Everybody was selling their Apple to buy all the Apple was nothing. In 2000. It was
So what you're saying is today all in on Tesla then?
Yeah. Tesla is one of those meme stocks, and maybe it's the original meme stock.
Wow.
But I still think Tesla has a way to go down and all these stocks. And that's Cathie Wood's, like, her core holding is Tesla. And that's what kind of helped propel her into the limelight. She got lucky with Tesla. She bought a bunch of Tesla.
Do you think she can get lucky again with the autonomy of full self-driving?
No. I think her day in the limelight, her 5 minutes or however much fame she had. Although, she still gets brought out. They still look at her as some kind of messiah. They don't realize that she was just in the right place at the right time. And there's an old saying about not confusing brains with a bull market. And that's particularly important in a bubble. You definitely don't want to confuse brains with a bubble because she was in a bubble and she's still in a bubble. She just doesn't recognize it. It's very hard to see a bubble when you're inside it. Right? It's much easier when you're looking from outside the bubble.
So with her arguments on robotics, battery storage, autonomy, genomic sequencing, none of those are interesting or just too expensive, too frothy in valuation?
All of that stuff is good. I'm not saying that she's wrong, that there's going to be innovation. Now, is she smart enough to pick the names that are going to make it? Probably not. Most of the stocks she's buying probably, are going to go bankrupt. She doesn't. It's very difficult to do. Like if you go back to the beginning of the automobile, there's like 100 automobile companies in America. So if you would have bought a bunch of these companies in 1900, because people are going to use cars, they're not going to be riding on horses anymore. You'd have been right. But most of the stocks you bought would have gone to zero.
Wow.
Right? Because, you don't know.
Yeah.
So Kathy Wood is probably right that we're going to have a lot of increased productivity that's going to result from, tech and artificial intelligence and all the stuff that we're doing. But are the companies that she owns now going to really benefit from it, or are they going to be put out of business by another company that she doesn't own? That just comes out of left field with something better. Maybe the companies that she's invested are just laying the foundation for other companies to rebuild on the rubble that they leave behind. Who knows? Now, maybe some of the stocks that she owns will end up succeeding, but the question is, what will they be worth? Maybe she already overpaid for them. Maybe they will succeed, but they're not going to be as valuable as she thinks because they're going to have a lot more competition. See, that's what happens. Like with Tesla, people were like, "Oh, look at this electric car market, and look at Tesla has half the market." So, and when everybody has an electric car, they're going to have half of that market. No, they won't, because as they start making money, they're going to invite competition. And so you may be right that everybody is in electric cars, but the market share of Tesla is going to be a fraction of what it is in the future when it's a much bigger market and they're competing with all these other companies. You pointed out, you came into my garage. I got 2 electric vehicles and neither one is Tesla. One is a Jaguar, one is a Porsche. So there's other companies that make electric vehicles. I don't have to buy a Tesla.
But do you have full self-driving?
No, but I don't. I don't have self-driving, but I wouldn't.
How valuable do you think?
There's too many potholes in Puerto Rico. I don't. Do they self-driving cars know to avoid the potholes?
In their last Investor Day presentation, they were talking about working on code that could identify potholes and then adjust.
What I need here is a self-driving golf cart.
Okay.
Because I'm in my golf carts a lot more, as you know, than
Model 2.
My actual car. But there are a lot of Teslas here, and I've been in Teslas. I'm not saying they're not. They're decent cars. By the way, Mae Musk has been to this resort. I had a good conversation with her one day.
Oh wow!
I've never seen Elon here, but I've seen his.
Do you like Elon?
Yes, I think I wish he was a friend of mine. I think he's an interesting guy. Very eccentric, I guess is a word for him. But
What about Twitter? Him buying Twitter?
Yeah, well, I was critical of it as an investment.
Okay.
When in fact when he first talked about it, I thought he was just joking with everybody, just like yanking their chain, and then he actually did it.
Yeah.
And I knew that if you followed my investment advice when he was doing it, I said sell Tesla. I said if he buys it, it's bad for Tesla stock, and of course that was around the time. But one of the interesting things is he was able to use buying Twitter as an excuse to sell a bunch of Tesla.
Yes.
Much higher.
Yes.
If he was selling it without that, it would have raised some eyebrows. But look, I don't really want to sell it. I need the money to buy Twitter. So people are like, oh, you overpaid for Twitter. Yes, he did, but he got a lot more money for his Tesla shares than they were worth. So it's 6 of one, half dozen of the other. But as a Twitter user, right? I use Twitter quite a bit.
No.
Yeah. I don't know if you follow me.
Of course.
But I'm getting close to 1 million followers. Maybe you can help me get up there. I'm like 920,000 Twitter followers.
You know, I tweeted a picture of us.
They're all organic. I don't have any, like bots following. I've never paid to promote a tweet or to buy a subscriber. So there is a lot of engagement on my site because it's all organic. It's all real people that are interested not only in responding to my tweets, but responding to the responses on my tweets, right?
How do you deal with the criticism?
Oh, I deal with it.
Do you read it?
Yes. I don't read them all because it's too many. But I like
too much criticism.
I like to too many replies.
Okay.
There's so much time in the day. But as a Twitter user, I'm very happy that Elon owns Twitter. I think he's done a great public service, by overpaying for Twitter and making all this information known about how Twitter colluded with the government to kind of help, influence the outcome of the 2020 election.
So what was your reaction to that?
Oh, I wasn't surprised. It's good to have the proof, right?
Did you see the Twitter or the Tucker Carlson Jan 6 videos on the inside?
Yeah. And, look, I've always believed that the left blew that out of proportion. That it wasn't like an attempt to coup. It wasn't a violent insurrection. I mean, people didn't show up with guns. They had cameras. They were taking selfies. They weren't shooting anybody.
Sure.
And it got out of hand. But they completely blew it out of proportion. And now you see like this main guy who got like a 4-year prison sentence is being escorted through the Capitol building by like half a dozen or so policemen who are like, here you go here. Oh, let me try that door for you. Oh, that one's locked. Let's try another one. I mean, if you're walking through the Capitol and you're being escorted by the police, and not only are they not trying to stop you, they're like helping you. Why would you think that you're doing something wrong?
Right.
Now, if the footage had shown this guy, like Rambo going through there, like beating all these cops up, like they're all trying to stop him, and he was like, doing some kind of karate moves or knocking him down, and he fought his way through. Okay.
Even some head shakes or no, don't go here, right?
Just push the guy out of the way, But no, it was like, and where was all that footage before? I mean, why did that guy have access to that footage, like in his trial, like to defend himself? But they did this to discredit, obviously, Trump. They didn't want Trump to run again. They're trying to get him, arrested or tried or whatever it was. So but the left lies about everything. I mean, it's not just this. I mean, it's not just the left. I mean, Republicans lie too. I mean, but the Democrats are probably, better at it. But I mean, if they're going to lie about something like, January 6th and make up all that stuff, right? Well, what does that tell you about when they're giving you economic data? They're talking about inflation or unemployment. I mean, none of that is true. The government lies about everything. I mean, that's at least the one thing you can say about government is it's consistent, right? Lies about everything.
So on the note of government, just last couple questions here. Biden or Newsom? I'm sorry, DeSantis or Newsom?
Well, obviously it'd be DeSantis. I mean, but the question is it DeSantis or who else in the
Trump.
Republican Party? Yeah, I'm not a big Trump fan. I voted for him the first time. I can't vote for anybody anymore because I live in Puerto Rico, so I've given up my vote. And the trade-off is I've given up the income tax, so it works for me. My vote was never that valuable. And normally I vote for the loser. Trump was one of the few times I voted for the winner. But I voted in Connecticut, and Trump lost Connecticut, so it was a complete waste of time, right, going to the polls and voting Republican in Connecticut.
You didn't get a mail-in ballot?
No, that's when I still live there.
Oh, okay.
I can't vote anymore. I don't live in Connecticut anymore. I live in Puerto Rico. We can't vote over here, right? So, but we also don't have to pay the income tax. So again, it's a trade-off that's beneficial, pretty much. I think everybody I know, if I basically asked them that question, would you give up your right to vote if you didn't have to pay any income taxes? I mean, it's like, sure, why do I need to vote if I'm not paying taxes? Who cares? Who cares who wins? They can't raise.
Wow.
But anyway, but it was like a waste when I was voting anyway, And I lived in California for a long time.
Oh.
I mean, I couldn't vote for the winner in California, right? So I'd vote Libertarian, knowing that they had no chance, right? It's just like
it's only Democrats win.
Just a ceremonial, vote just
Yes.
to, give the guy some encouragement that ran.
Keep going.
But the problem I have with Trump, I mean, he's a genuine guy and he did some things that were good, right? Which at least is better than Biden, who's done no things that are good, right? So did some things.
Is he going to make it to 24?
Oh, is he going to survive, live long enough?
Will he be capable to run again?
I don't know. Look, what was the other guy that ran with a disability that won? Fetterman. Yeah, look at him. And now he's like in the hospital, right? He can't even get into the Senate because so, I mean, he could be like, what was that? Not Weekend at Bernie's but remember Woody Allen where they had the leader and he was just like a thumb or something, or I forget, but they could find a way to prop him up and just let him run, right?
So Trump versus DeSantis?
But Trump was more of a populist. He he didn't go to Washington and do what I would have done if I was there, which is, drain the swamp.
Oh,
right?
so he didn't.
Right. No, he didn't. I would have cut spending dramatically. I mean, across the board. I wouldn't have created the Space Force. I would have gotten rid of like a lot of the government agencies. I would have had big cuts to entitlements, Social Security, Medicare.
Wow. That's very unpopular.
Well, that has to be done, and it takes a real statesman to do it. I was hopeful that maybe Trump, not a career politician, would try to do what's right and not what's politically expedient, because no politician is going to do what's unpopular. That's the problem with democracy. All the things that need to be done are very unpopular. And it would have been great if Trump did them. I mean, I wouldn't care if I was president. I would just do everything that I needed to do. I wouldn't care if I ever got reelected. I wouldn't care if people didn't like me. This is what needs to be done.
Is that ever going to happen?
No, I mean, you can't get elected telling the truth. You have to lie to get elected, and then you have to tell the truth after you get elected. But that never happens. You lie your way into the White House, and then you keep lying the whole time you're there. But Trump was a big spender. He was a big taxer, except he just wanted to tax people with tariffs and pretend that the Chinese paid him. But and look, tariffs could be a better way of raising taxes than income taxes. So if you lower income taxes and then put tariffs, that's a positive as far as I'm concerned. But he didn't do that. I mean, there were some little tax cuts, but then I was like, in that race, the initial 2020 race, my candidate was Rand Paul. So that's who I supported, but he kind of fell away. Trump sucked all the oxygen out of the room. In fact, a lot of Ron Paul supporters ended up going to Trump.
Yeah.
Trump was more charismatic than Rand.
Sure.
Right. But the one reason I would like to see Trump president is because of how many people would be so pissed off that he got elected. I mean, and the people who I don't like.
You mean in 24? Yes.
The people that I really don't like are the ones that will be pissed off. I mean, they were already pissed off when he won the first time.
I see.
So that,
And DeSantis wouldn't cut it for you.
Well, I mean, DeSantis is fine. I mean, but again, I don't expect, he's not a game changer. I don't think DeSantis is going to go to Washington and do what needs to be done.
But he punished Disney. Now he has his board controlling.
But I mean, look, he's a decent governor. I mean, I would definitely, if I had the ability to vote, my mom still lives in Florida. She'd vote for him.
God.
I think he'd probably be a better candidate than Trump in that I think it'll be easier for him to win against Biden. But I think if 2024 is Biden-Trump, I think Trump will win again. Because I think the economy will be so bad by 2024, it'll be very hard for Biden to run on a campaign of 4 more years.
Right.
And even though Trump...
Want what we just had? 4 more years.
And even though Trump highly exaggerated how strong the economy was when he was president, just like Biden is exaggerating it now, people don't even remember what it was actually like. They just know how lousy it is now. And he can still say, look, everything was great. And then I handed it off to Biden and it's a complete mess. So I made America great once, I'll do it again. Just got, so that's why they may have to get rid of Biden just to have somebody else run because, but I don't know how you have another Democrat distance themselves from Biden.
Right. It'd have to be like a Newsom or something.
But it's almost like the Democrats want Trump to run because they think they can beat him.
Right.
But that's the mistake they made the first time. He was like their dream candidate because they thought, he can't win. And then their dream turned into a nightmare.
Last question. Your son is still into Bitcoin, and you were not.
Yeah, I know. Well, he's still only 20. So,
but it's not at zero yet. In
no,
fact, it's over 20.
But I'm saying his age is 20.
No, I know, but conveniently,
so
Bitcoin's
he's still
also
young.
over 20. I know.
Right. The old saying was, if you're not a socialist by the time you're 18, you don't have a heart. If you're not a conservative by the time you're 28, you don't have a head. So he still has a few more years to mentally grow up and recognize the error of his Bitcoin ways. But there are a lot of adults in my neighborhood here that are into Bitcoin or other crypto.
This is a nice neighborhood.
Yeah, and they got in early, and they were able to cash out. That's why they can afford to live here. Right? But the people who bought their Bitcoin, they're not going to be able to afford to live here because they're going to lose all their money when the bubble pops. But yeah, I haven't been able to convince my son he is as committed in his belief. Now, he's kind of a Bitcoin maximalist, so he doesn't like all the other cryptos.
Okay.
He's just Bitcoin, right? So
now, we just went from 69,000 to 15,000. You had the collapse of FTX. You have the potentially near collapse of Binance. They're obviously still around. What's it going to take? I mean, if Bitcoin's able to survive that and falling to 15K and rebounding, why would it go away? Maybe it is an inflation hedge.
Well, nothing goes down in a straight line.
Okay.
There are a lot of people with a vested interest in maintaining the price of Bitcoin. So there are people that were there to buy. But I don't expect Bitcoin to make a new high. I think after this consolidation is over, as we're doing this interview, it's around 22,000.
Yeah.
But I do expect during this year for Bitcoin to break down and take out the lows from last year, whatever it was, 15, 16,000. Yep. I think we'll probably trade under 10,000 before the end of the year, be my guess. Will we close below? I don't know. I mean, they're probably buy the dip again.
Sure.
But, then maybe the following year we'll take out 5,000 or 1,000. But I do expect the rest of the air to come out of this bubble.
As inflation remains sticky. And
it proves that it's not a hedge. Mm-hmm. It's not digital gold. It doesn't have any properties in common with gold. It's just a collectible token, digital token. But it doesn't have any actual value. I mean, it's not good as a medium of exchange or a unit of account. It can't be a store of value because there's no value to store. But it has a price because people think it's going to go up. So people are willing to buy it and hold it.
You don't think the international trade or being able to send money overseas through blockchain?
Well, you're not sending money. You're sending Bitcoin, right? The difference, but in theory, you can sell that Bitcoin and get money.
Sure.
But what if you can't? What if the price collapses? And then when you go to sell it, you can't get much money for your Bitcoin. But, you can do the same thing with cryptocurrencies that are actually backed by something. And I've been talking about this, and this is what I believe is the future of blockchain or cryptocurrency.
Stable style coins?
Right, but not stable to a fiat currency like the dollar, but stable to real money like gold. Mm-hmm. So if you're really looking for an alternative to a fiat system, but one that is easily incorporated into online transactions,
sure,
where you can send your tokens around the world quickly and for a low cost, the solution is tokenized gold. It's to have a central depository or private company, wherever governments, anybody can do it. You take gold, you tokenize that gold, and now the tokens are freely tradable. They're redeemable in gold. If somebody wants the gold, they can take the tokens and deliver the gold. But more likely, they can exchange the tokens, use them as a medium of exchange. Businesses could use them as a unit of account and a medium of exchange. Everybody can use it as a store of value. And then you have a real currency backed by real money, except it's a crypto, digital currency as opposed to a paper currency. But, before we had fiat money.
Then it's real digital gold.
Right. Well, it's not. Yeah, it's a digital representation of actual gold.
Right.
Bitcoin is a digital representation of nothing. They depict Bitcoin like the coin. They make this gold coin. They put a B in there, But there is no actual coin anywhere. There's no substance. And that's why there's no difference between a Bitcoin and a Satoshi. I mean, the only difference between a Bitcoin and a Satoshi is that one Satoshi is 100 million Bitcoin. Well, one Bitcoin is 100 million Satoshi. But I can't do anything more with a Bitcoin than I can with a Satoshi because I can't do anything with a Satoshi. So it doesn't matter how many I have.
Relative to, let's say, I think you posted a silver article where you mentioned, look, silver is used in solar. There's actual conductive property to silver.
Yes, and the more silver you have, the more you can use it in industry. I mean, there's a difference between having a gram of silver and an ounce of silver. I can do a lot more with an ounce. But I can't do anything more with 100 million Satoshis than I can with one, other than I can give them away, I can trade them. But there's nothing you could do with any of them. Even if I had all 21 million Bitcoin, what could I do with them? Nothing. I couldn't do a thing.
One question from Twitter that seems to be a question a lot of people have is, why have gold prices been flat for years with inflation soaring?
Yeah, well, you got to go back over the last 20 years or so. 20 years ago, gold was under 300. And it had a big run up to 1900 in 10 years. So that was a big move. And so it spent the last decade or so kind of consolidating that move. And so gold is an inflation hedge, but doesn't mean it's going to be perfectly correlated, every year. It's over longer periods of time that it's going to hold its value. I think that gold got ahead of itself when it ran up to 1900. I think it's behind where it should be now. But a lot of that, again, has to do with the false expectations that people have about the future trajectory of interest rates and inflation. When more people recognize reality, and eventually they will, right? Abraham Lincoln said you could fool some of the people all the time and all the people some of the time, but you can't fool all the people all the time, right? So eventually the people, the bond market, the gold market is going to wake up to reality. And then there's a lot of catching up to do in gold. I mean, all of a sudden the sellers are going to disappear and the buyers are going to, increase in number, and the price could shoot up very quickly. So let's say the price of gold, which is now around 1,800, it could have 1 year where it moves up to 5,000, right, from 1,800. And all of a sudden, hey, wait a minute, now I'll go back over the last 5 or 10 years, and it's kept pace, right? Because all of a sudden it has a big move in 1 year.
I see.
And now you've caught up. So some people just lose patience.
Well, that's what Cathie Wood says. Just wait 5 more years.
For her stocks. Yeah. Well, she's waiting for Godot, waiting for those stocks to come back. But there's a difference between a valuable commodity and a money-losing company. I mean, because that's 5 more years of losses, assuming the company could survive those losses. But yeah, I mean, like I said, I think that bubble's already popped. And so it's difficult to reflate another one. A lot of people think, oh, look at Bitcoin, right? The bubble has popped so many times. It really hasn't. I mean, it's just been one big bubble ever since it started in 2009, 2010. But I do think it's, it's, as I said, I think it's likely peaked. And I think, the peak coincided with the meme stocks and the NFTs and El Salvador and, the Super Bowl commercials, Miami. And all the hype. Yeah. Right. I mean, 2021, was massive, a blowout top. Because you have to ask yourself, it was like all this money that was spent advertising, promoting, pumping, and Bitcoin went down. How come? Because all the people spending all that money to advertise were the ones selling.
Oh.
Right. So it was just like, it was a distribution top where a lot of the insiders distributed all their crap to the mom and pops who, saw somebody on Instagram who was touting a coin or, TikTok, all these influencers jumped on the bandwagon and were paid all kinds of money. Oh, yeah. Right. I mean, who was it? Was it Kardashian that got fined by the SEC?
Yep.
But all these pop stars and athletes, they all got sucked into it. Look what happened to poor Tom Brady. He got sucked into FTX.
Yep.
But that was the peak. That was the end of it all. That was like, they rang a bell and hey, it's over. Everybody's in. This is it. And so, but people just don't recognize that's just over. But a lot of money is going to be made as the bubble deflates, right? I mean, a lot of people are going to lose money.
Sure, but people get out on the way.
Well, the people who get out have already made money. But there's a lot of money to be made. I mean, I did really well as an investor between 2002 and 2008 because all the stocks I was buying during the NASDAQ bubble that didn't go anywhere just went way up in between 2002 and 2008. I mean, great returns. So I was able to harvest the returns that I planted during that bubble. So I think a lot of the positions that I have now that I've been building over the years, I think the profits are really going to start to come in as the rest of the air comes out of that bubble the way it did following the bursting of the bubble in 2000.
Wow. Well, this has been incredible. Peter, how do people get in touch with you? You've got schiffradio.com, at Peter Schiff, it looks like pretty much on everything, and Twitter, YouTube, Facebook, Instagram. What am I missing here?
Well, you got my podcast, The Peter Schiff Show, which is Schiff Radio. You can listen to it also on my YouTube channel. I don't have your kind of numbers yet on YouTube. Actually, I think you just came out of the blue and just like passed me. Because I have about a little over 500,000. And you, what are you, a couple million now, or
right around there?
Yeah. So I mean, but I'm on YouTube, so you can find me there. You get my podcast. But the most important thing is, if you're listening to me, to tell your friends to listen, because we need to grow the army of people who know the truth and understand economics, and people are getting brainwashed at universities. So I need to get more young people, to listen. Yeah. And I have a good young audience. I mean, they can't afford to be clients of mine, but that's fine. Maybe they'll be clients in the future.
How can people reach out to you to be a client of yours?
Yeah, well, there you can get a hold of me through my main website now is Europac.com. Europac.com. And that's for my asset management company. And you can call us, you can fill out a form online, and one of the representatives will get back to you to talk about our investment strategies, see whether or not they'd fit into your portfolio. Also, for physical precious metals, you can go to Schiff Gold and buy physical gold and silver, and you won't get ripped off. The problem in the industry today is that so many people are overcharging for their gold and silver. Big markups, and they pay celebrities to go out and endorse them, and then they pay the celebrities a lot of money, so now they got to overcharge their customers to pay the celebrities. We don't do any of that. Schiff Gold doesn't advertise at all. It's just my followers go and buy, and so it's very low markups, right? And so it's the best way to go out and buy physical gold and silver. But also, if you don't want to have an account with my firm, you don't want me to, you don't want to set up another account, which I encourage people to do. I think it's worth the effort. But if you're one of those do-it-yourselfers and you've got, an account at Schwab or Fidelity or, Interactive Broker or any of these discount brokerage firms, you can buy my mutual funds. My mutual funds are on the platform. They're there. The Euro Pacific Fund family. I've got a global value fund, the dividend pair funds. Those are the ones that are crushing it. Nice. According to their competitors.
Is there a ticker for those?
Yeah. You can go get them on my website and then buy them anywhere, right? Just go to Europac.com and look at the mutual funds. Okay. I've got a gold fund, I've got an emerging market fund, and a foreign bond fund. So those are my 5 funds, and you can buy them anywhere.
Emerging market, would that include China? Bullish on China?
Yeah, more Hong Kong. Okay. Only a couple of mainland China names in there. Okay. But I'm bullish on China. The only reason we don't have more China, I think, is just worries about some kind of sanctions that force us to have to sell. You have to divest. Yeah. And then, of course, when you do that, you're not going to get a good price, right? When you're forced to sell and everybody's being forced to sell, the lucky ones are the ones that get to buy, right? So that's why I don't believe in any of this. The government should not be restricting Americans and if they want, on where they can invest their money. Wow. It doesn't actually make any difference. I mean, if it's a publicly traded stock and you say Americans can't hold it, it's not going to change anything for the company. All it means is the American is going to end up losing money. And some foreigner is going to take advantage of the American who's been sacrificed by his own government. Right.
That share dilution goes away. They get more value.
or the Chinese get to buy back the shares on the cheap.
At a discount. Yep,
right. Exactly. And the Chinese citizens benefit. The Americans suffer. Yeah. And I don't even think it's legal. I mean, the way it's deprivation of property without due process. It's not, And we're not at war with China. I mean, there's, it's not like, I mean.
Is China going to invade Taiwan though?
I don't know. I don't know. But
that'll be for part 2. That'll be there.
I hope they don't. I mean, I don't like war. I don't like the war that's going on right now in the Ukraine. And I think if we hadn't gotten involved, I think it would have ended a long time ago.
Wow. And so we're keeping it going.
I think so. I mean, maybe not by ourselves. We got some European partners, but I think the Russians and the Ukrainians would have been much better off with a quick resolution.
Yeah.
In fact, they would have been better off if they avoided the conflict in the first place, which should have been done. It was a diplomacy failure that this even happened.
Oh yeah.
And now we're bragging about the fact that, the war's been going on for a year. That's not a success.
No.
That's a failure that they're still at war.
Yeah. Peter.
All right.
Thank you so much for inviting me into your home.